Russia threatening to cut oil output by up to 7% or up to 700,000 barrels per day in response to sanctions and price caps placed on Russian oil in response to the country's invasion of Ukraine. Oil trading, we can see that's up about $2.76% today, up about $2 and change, just closing in on that $80 per barrel price level. Now we have Scott Bauer, CEO of Prosper Trading Academy, joining us. And Scott, I was just reeling off the latest price of oil here. We bounced off 70. Now that's basis WTI here. We had, and I think that was earlier in the month when we were first getting those actual sanctions by Russia plowed on. And now we really didn't see much of the way in negative price action from there. In fact, we're up about $8. Just wondering how you're viewing the oil market in response to this latest news.
Yeah, I have been bullish oil ever since we've started dropping below 100 and buying it on every dip, selling it on any sort of rally here. I've had to get stopped out a couple times, but $70, $71, Jared, that really to me is a short-term bottom. When I say short-term, I'm saying at least 6 months. The floor is put in for a number of reasons. First off, that's where the administration has said, we're going to replenish SPR if we get down there. So to me, that is, somewhat of a floor. Also, I think there's just still a tremendous amount of tailwinds in the space here. Number one, as it has been for me all year, is what's going on in Russia, Ukraine. Number two is what's going on in China. And I believe that the oil market anyway, has seen the worst case scenario in terms of demand, in terms of lockdowns, even with the latest, policy that they've talked about with kind of opening back up and people getting COVID. I think we've seen the worst in terms of demand. It's only going to get higher from here. So there are just a bunch of tailwinds. And that $70 number to me, because of the SPR, that absolutely is a floor.
Yes, President Biden talking about buying oil at $70 per barrel for the SPR to replenish it from those from the lower levels that it's fallen to. Now, you mentioned the double whammy this year, and we were talking about price bottoms. What about a ceiling? What would it take to see a ceiling in terms of the news flow, in terms of price action? What are you thinking about as you think about those upper targets here?
It absolutely would not surprise me to see oil back in the 90s with a 9 handle. To break 100, though, I think is going to be a real tough job. I just don't see any scenario other than some more major geopolitical conflict that we're going to see oil just get to those prices again. And listen, that's not out of the question, unfortunately. That can happen. But I think this range of the low 70s, probably to the mid 90s, is somewhere we're going to be for, at least the first and second quarter of the year. All
right. And what about natural gas and some of the other elements to the energy sector? We've seen natural gas prices drop off quite precipitously. That has its own supply and demand aspects, but maybe you could just comment on that market a little bit.
It absolutely does. And in fact, if you're looking at what's going on in Russia right now and the news that they, announced that they might be pulling back, production here, that is really just for crude and oil products. It is not for natural gas. So I know that especially in Europe, there has been a shortage, but right now, I'm not going to say it's fine, but the natural gas supply right now is not as dire, if you will, as what we're seeing on the crude side. And again, if we turn back to Russia, 40%, almost 40% of all of their export revenues are from the oil space, not from natural gas. So natural gas is still flowing. I don't see that we're going to get a major spike again, certainly not to where we were. UNG, which I track very closely, is trading right around 15.5, 16 right now, which is a low we've seen in probably 3-4 months. That was as high as the mid 30s just a couple months ago. Maybe we see a 15-20% pop in natural gas from here just because of this massive sell-off that we've had. But I don't think that we're going to get into the crunch like we might get with crude.
Well, we've been talking about the Russian, the Russian effect on crude oil supplies. It seems to me when this hasn't had necessarily bearish price action consequences when we talk about crude oil this year. And I think part of it comes from the fact that we have dark supply, so that you never see oil taken off the market considerably. You see a market clearing price. So at some price, somebody's going to take Russian oil off the market. Just wondering, with all the sanctions in place, with all the eyeballs on this, what are the potentials for violations of that next year? What are some of the situations that could evolve that could actually be bearish for the price of energy that might not be factored in right now?
So in all honesty, there's probably violations going on right now, and there will continue violations going on. Some of that's just going to be, let's call it, glanced over. But we're not going to see, in my opinion, the price get much below 60, which is that price cap there. Maybe we'll see it a little bit, but that is a number that G7 came up with to hopefully reduce Russian export revenue, but a price high enough to keep it flowing to the market. So yes, there's always some underhanded deals out there. And when you're looking at really the 4 countries that are really still in the market buying Russian oil, you're looking at Bulgaria, China, India, and Turkey. You got to think that there's be some violation there.
Yeah, I love doing a deep dive on the oil market and the futures markets on the day before Christmas Eve here. Thank you for joining us, Scott Bauer.